The moment it became a bunker-busting weapon, piercing through the protective layers of Iran's nuclear facilities in one strike, the resulting shockwave not only shattered a critical bottleneck in the Middle East, but also completely destroyed the last shred of global trust in U.S. debt. This military conflict, which at first glance seems confined to the Middle East, is like a nuclear bomb dropped into the global financial system, completely and unreservedly detonating the debt crisis that the United States has accumulated over the years, thereby exposing the deep cracks hidden behind American hegemony. At the very moment smoke was rising from Iran's nuclear facilities, the core of power in Washington was mired in an unprecedented state of anxiety. The financial officials in the Trump administration were all staring intently at their ledgers, their brows tightly furrowed. The staggering $36.4 trillion debt loomed over the American economy like a Damocles sword, gleaming with a chilling edge. Just the debt coming due in June 2025 alone already amounts to a massive $6 trillion. Such an enormous and heavy debt repayment burden has forced the U.S. Treasury to rack its brains for solutions. In order to ease this tremendous pressure, the Treasury has tried issuing ultra-long 40-year bonds, hoping to buy time and create breathing room to tackle the problem. However, the market showed no mercy at all, with the auction scene looking deserted and completely ignored by investors. This undoubtedly dealt another heavy blow to the already teetering U.S. debt system. Going back to June 13th, Israel launched a military operation codenamed Rising Wem. Fighter jets screamed as they launched a sudden attack on Iran's nuclear facilities. In just a short period of time, 5 extremely important targets were reduced to rubble amid violent explosions. Naturally, Iran was not about to sit back and wait for doom. In less than 12 hours, their counterattack was unleashed with overwhelming force, like a thunderbolt. Multiple missiles streaked across the night sky, striking their designated targets with pinpoint accuracy. Ports were swiftly shut down, and cargo ships ceased all movement in and out. Oil exports came to a complete halt. This move instantly severed a critical link in the global energy supply chain. International oil prices, like a wild horse breaking free, surged from $70 all the way up to $120. A financial nuclear explosion triggered by geopolitics had thus officially begun. The global economy also became increasingly precarious in the midst of this fierce storm. In fact, America's debt crisis has long been an open secret, it's just that various means have been used to barely maintain a facade of calm. In May 2025, Moody's made a historic decision by downgrading the United States sovereign credit rating from the highest AA level to Ba1. This downgrade completely shattered the myth of the United States holding the highest rating since 1917. The reasons Moody's gave for the downgrade hit the nail on the head. With a staggering debt of $36.4 trillion, the debt-to-GDP ratio has already broken through the 120% warning line. In 2025 alone, the amount the U.S. government spent just to pay interest on its debt swallowed up 22% of its fiscal revenue. Such a heavy debt burden has left the U.S. economy truly overwhelmed. An even more dangerous signal is coming from within the financial markets. When the Trump administration tried to issue 40-year bonds with an interest rate of just 3% to replace old debt, Wall Street investors made their stance clear through their actions. Major European investment banks mocked this move, saying that the United States is a country deeply addicted to politics and is spending its future in advance. Their words were full of disdain. Major hedge funds collectively pulled out of the U.S. Treasury market, redirecting their capital into safe haven assets like gold and energy. What's truly shocking in this wave of sell-offs is that domestic U.S. investors have actually become the largest group to flee. The scale of their single-quarter sell-off reached a staggering $1.5 trillion, far surpassing the amounts sold by China and Japan. U.S. Treasury bonds, once considered the world's safest asset, saw their safe haven aura completely extinguished at this moment. Global investors' confidence in U.S. Treasuries also plummeted to rock bottom. Facing the overwhelming debt tsunami, the Trump administration rolled out 3 major moves in succession, trying to turn the tide. However, none of these measures achieved the desired effect. Instead, they pushed the U.S. economy even deeper into trouble. The first move was to forcibly implement reciprocal tariffs. Trump attempted to use trade tactics to force his trading partners to take on U.S. debt. However, this move triggered severe shocks throughout the global supply chain. Other countries quickly responded with countermeasures, and international trade frictions continued to escalate. The proportion of U.S. debt held by foreign investors plummeted from 34% in 2018 to just 29%, causing the U.S. to lose a significant amount of external financial support. Although tariff revenues hit a new high of $16.1 billion, this came at the cost of driving up business expenses. With rising operating costs for companies, America's domestic inflation nightmare only worsened. As a result, economic development fell into a vicious cycle. The second trick, the debt swap magic, was also rejected by the market. That mere 3% yield is far lower than deposit rates in Europe, making it completely uncompetitive in the global interest rate market. China has further accelerated its sell-off of U.S. Treasury bonds, with its holdings dropping to $765.4 billion, hitting the lowest point in recent years. Other countries have followed suit, and U.S. Treasuries have become increasingly neglected in the international market. The most lethal third move is that Trump tacitly allowed Netanyahu to launch airstrikes against Iran, attempting to replicate the old playbook of using high pressure to control oil in order to achieve his goals, that is, stabilizing the dollar's hegemony by controlling Middle Eastern oil resources, and thereby alleviating the debt crisis. However, he seriously underestimated Iran's resolve to retaliate. Iran directly blocked the Strait of Hormuz, effectively cutting off this vital artery of global oil trade, causing 30% of the world's oil trade to come to a sudden halt. Oil prices then soared to $120 per barrel. Inflation in the United States skyrocketed to 12%, like a rocket taking off. The Federal Reserve found itself in a dilemma. If it chose to raise interest rates, it could suppress inflation, but it would also increase the cost of repaying debt. If it opted to lower interest rates, it might ease debt pressure, but that would further fuel inflation. No matter what choice was made, it was difficult to escape the current predicament. Israel's missile strikes not only caused severe damage to Iran's nuclear facilities, but also shattered the last pillar supporting U.S. Treasury bonds. After Iran announced a complete halt to oil exports, the petrodollar recycling mechanism, an essential cornerstone of America's financial hegemony, suddenly broke down. The chain reaction was extremely swift, sweeping across global financial markets in an instant. As a major global oil exporter, Saudi Arabia's energy advisor publicly hinted that future oil contracts might be settled in a combination of euros or yuan. This news landed like a bombshell, greatly shaking the dollar's dominant position in oil trade. Central banks around the world have been frantically increasing their gold reserves, purchasing 350 tons in the first quarter of 2025 alone, a record high. As a result, gold has become an important choice for central banks to hedge against dollar risk. Meanwhile, the dollar's share in global foreign exchange reserves has plummeted, dropping sharply from 79% in 2015 to just 58%. The dollar's hegemonic status is now on the brink of collapse. Facing such a severe crisis, Trump urgently redirected 20,000 missiles originally intended for other purposes and sent them to the Middle East. This decision not only offended European allies and damaged the transatlantic alliance, but also indirectly emboldened Russia's offensive on the eastern Ukrainian battlefield. A huge amount of funds was poured into the military sector, with defense spending flowing out like water, constantly being consumed, and even the money set aside for debt repayment was mercilessly swallowed up. As a result, America's debt crisis only worsened further. The root of this crisis goes far beyond what can be explained by mere tactical mistakes. Even the Federal Reserve had to candidly admit in its latest financial stability report that the staggering $36 trillion debt has become the greatest threat to the U.S. economy, with its severity even surpassing that of inflation and geopolitical conflicts. Yet, America's two-party politics has actually turned the debt ceiling into a tool for partisan struggle. In 2025, the United States once again raised its debt ceiling. This endless political game has made America's debt problem increasingly intractable, with interest payments for the first time in history surpassing military spending. In 2025, interest payments are expected to swallow up $952 billion. Such an enormous interest payment has already become a heavy burden weighing down on the U.S. economy. The Trump administration's erratic handling of this crisis has only accelerated the collapse of global trust in the United States. After the airstrike on Iran, he suddenly changed his tune on social media, saying that China could now continue to buy Iranian oil. At the NATO summit, he then declared, "If they want to sell oil, let them sell it." Such completely incoherent strategic statements have left America's allies dumbfounded and sent chills down the spines of creditors around the world. When Saudi Arabia began shifting to settling oil trade in renminbi and Russia accelerated its de-dollarization process, the collapse of the petrodollar system seemed all but inevitable. The twilight of American hegemony is quietly descending. This debt crisis triggered by the Israel-Iran conflict may be just the beginning. In the future, the United States and the global economy will face even more challenges.